So, you're thinking about moving to Orange Beach, Alabama, Gulf Shores, and the surrounding areas. Well, today I am here with local lender Sherry Weaver with FirstBank. Sherry is 37 years in the business. She is a wealth of information and knowledge, and we are going to talk everything from mortgage rates to condo lending to why use a local lender and the do's and don'ts when you're buying a loan. So, it's going to be a very informative video. My name is Aileen Fountain, along with my partner Andy Hollis. We put these videos out each and every week just to be informative, let you know what it's like to live at the beach, and keep you up to date of the current market conditions in Orange Beach, Gulf Shores, and the surrounding area. So whether you're thinking about moving here in 9 days or 90 days, pick up the phone, call us, email us, text us. We hear from people just like you every single day, and we absolutely love it. If you want a face-to-face meeting, set up a Zoom with us. We'd love to meet with you face-to-face. Like our channel, subscribe, and ring the little bell. That way you can be notified each and every time we put out new content. So here we are. Without further ado, we're gonna turn it over to Sherry Weaver. She is known as the Condo Queen in our local market, and we'll get right to it.
Okay.
Welcome, Sherry.
Thank you.
Thank you for agreeing to be on the channel with us. We have used Sherry. I've been in the business 20 years, and Sherry is one of the most knowledgeable lenders that I've ever dealt with, and so we thought it would be perfect to talk to her today. All right, so I know you don't have a crystal ball, Sherry, but what are you seeing in the coming months with rates, and how do you see the rates kind of progressing as 2023 moves on? Would love to hear your insight on that.
Well, if I did have that crystal ball, I'd probably be talking on Wall Street. But what I do instead is try to inform myself by reading what others in the profession give as guidance. And what we have read is that, and we've seen personally in our day-to-day business, is that investors have increased the interest rates and the yield by charging points on the loan in anticipation that rates will come down and they're going to lose those loans. They're going to run off, they're going to refinance. And so that tells me that people with way more knowledge than I have fear and feel that the rates are going to come down and we're going to get into a big refinance boom again. The timing of that, nobody knows, but it should be within the next year.
So obviously, traditionally, we're in a slower time of our market in January. Are you seeing a lot of new loan applications come through right now?
Yes, it's kind of always been, since I've been in the business, like a light switch. Nobody's calling, and then all of a sudden everybody's calling at once. And that happened for me this past week when multiple people calling all at the same time, filling out applications, going out to look, making offers.
Yeah. Well, actually, we are now in early February, so that does make sense because people are gearing up to get their spring purchase and capitalize on this year's rental season. So that's great to hear. Most seasoned agents in our market, when you call, they're going to want to know, if you're pre-qualified and if you're using a local lender. And that is not because we get any kind of kickbacks. That is because we have been down the road so many times using out-of-town lenders, and the loan process just doesn't go as smooth. Sometimes they can't get the loan done altogether if it's something like a condo loan or some kind of specialty loan. So that builds a lot of frustration from the buyer, and we don't want that. We want to alleviate that. So we always recommend using a local lender, and I'm actually going to let a local lender tell you why that is so important, so you can hear it from her perspective.
Well, specifically in the condo market, when you use an out-of-town lender, they may or may not have condo experience. They may rely on the underwriter to tell them that a project is approvable or not. We feel that that is far too late in the process. So as a local lender, we are familiar with the condos, not only which projects possibly to stay away from, which do not have good financials, but also which associations are very cooperative in filling out the information that we need. And that can, if you don't know that information, that can delay a closing.
Yeah, and I know from personal experience, this has happened to me more than one time. The buyer is pre-qualified with their hometown lender. The hometown lender has assured them that they not only do condo lending, but that they can absolutely do the condo loan. And just as Sherry mentioned, you don't find out until you're 3, sometimes 4 weeks in. I had one I found out the day before closing that they actually could not close the loan. Well, then what am I doing? I'm frantically calling Sherry to see if we can get the loan switched over to her. Well, there's only so much Sherry can do. She certainly can't close it the next day like you're supposed to in the allotted time frame. In some cases, she's got to almost start all the way over. So that can create a very bad situation for the buyer, a lot of frustration. You could lose the contract. And it's not worth it. Sometimes the hometown lender is promising a better rate. At the end of the day, if they can't get the loan done, the rate is irrelevant. And is it worth it going through all those headaches to save what, an eighth of a point? Are we talking? So anyway, that is why most local realtors really do want you to use a local lender. It's nothing more to it than that. Is there any reason, now I've done plenty of out-of-town lenders on a residential side, but even that can be a little more smooth with a local lender. Would you agree with that, Sherry?
I do, because sometimes if there are any issues with the property, most out-of-town lenders are going to rely on pictures in the appraisal. We can actually write out to the property and look for ourselves. So that's one main advantage of using a local lender on a residential type of property.
I've also noticed on homeowners insurance quotes that the relationships that you've got with the insurance people who, a lot of times you think, oh, well, getting insurance will be a breeze, but it's not, because your property you're buying is a mile from the Gulf of Mexico. So that can also come in handy in that regard from what I've seen. That's right. With other lenders that are out of town. So we just talked a lot about condo lending. She is the condo queen, and there are some very specific changes that are coming to condo lending. And so I'd like for you to kind of simplify and explain those changes that are coming.
Okay.
The big bugaboo in condo lending used to be the determination of, is this project a condotel? Which means condo/hotel. And that's against Fannie Mae's charter to lend at a condotel. But the problem became is that determining whether a project is a condotel was in the eye of the beholder, as a matter of opinion. Well, that has recently changed in that Freddie Mac has come out with a way that we can look up a condo project and see what their interpretation is and go by their interpretation, instead of guessing, will Fannie or Freddie think this is a condotel or will they not? It's taken some of the guesswork out of it.
So it's a good thing.
It's a good thing.
Awesome. Okay. So you obviously specialize in residential and condo lending, but you've got some other tricks in your bag of lending that you specialize in. Talk about those.
Well, you always want to have a lot of tools in the tool belt. And so not only do we want to do condos, we also want to do residential properties, and specifically focusing on first-time home buyers. We have all the first-time home buyer programs, and the skill of that is figuring out which product to put the customer in, what fits their needs the best, and what do they qualify for. Some of the first-time home buyer programs have income limits, so we need to look at that. Some of them don't have income limits, so it's a matter of placing the buyer in the correct loan product.
Similar to having a real estate agent who has a lot of experience, it's also just as important to have a lender that knows these products and has experience. And somebody like you, obviously, you would be able to help guide somebody into what loan was really the right loan for them to go into. Yeah. So we're going to talk just real quick, piggybacking off of the first-time home buyers that she's talking about. A lot of people who are buying their second home or an investment property, they're pretty up to, they're very knowledgeable on the loan process itself, but a lot of people aren't. So I'd like to talk about some of the don'ts to do right before you're going to apply for a loan, and some of the do's that you should do if you're gearing up to get pre-qualified.
Let's start with the do's. It's not too early, 3 months, 6 months before you plan to make a move or make a purchase, to go ahead and meet with a lender and get pre-qualified, because there may be some things that you have to do to be ready to buy. And one of the questions a lot of first-time home buyers have is, should I pay off debt or should I save for a down payment? And that we can't really know until we look at your credit, look at your bank statements, and see which program to plug you into. And that may require a payoff of a credit card. It may require saving up more, or it may require getting more gift funds. So the earlier the better to start getting ready to make a purchase. The don'ts are, first and foremost, people laugh about this, but it has happened. Don't quit your job. And to piggyback on that, don't even switch jobs.
We've been through that, I know.
Yes. Without calling us. We, of course, don't want you to lose an opportunity for a better job, more pay, but we do need to know about it the day, well before the day of closing. So just let us know if you're about to switch jobs, and please, if you lose your job or quit your job, we need to know it right away so that people don't keep spinning their wheels on a transaction that ultimately can't close. One of the other things that we find pretty common is that people got nervous during the pandemic and other times, and they hid a lot of cash at home. And then they want to put that cash back in the bank. Well, because of anti-money laundering laws, lenders are very strict about cash all of a sudden appearing in your account because it's not documentable. So if you've been squirreling away some savings at home, get it in the bank at least 3 months prior to you making a move.
Okay, awesome. Yeah, and I know another thing we've been through, actually I know Andy's been through it, is somebody, you get excited, you're buying a new house, you think, oh, well, we go well with a new house, it'd be a new car. And that could really mess up if you're under contract the loan process.
Not only do we not want you to buy a car, we don't even want anyone checking your credit. We once had to delay a transaction because a gentleman walked into Cabela's and they were giving out a free coffee mug if he would apply for a new credit card. So we had to delay the process until that credit card balance got verified.
Over a coffee mug.
Over a coffee mug. Yeah, so don't open anything. Don't buy anything new if you can possibly help it. And if you do, please tell us before the day of
preferably closing. Ahead of time.
Yeah.
Okay. In some previous videos that we've done, we have discussed the 2-1 buy downs that are currently being talked about in the mortgage industry and in the real estate industry. So one of the questions that I wanted to discuss with Sherry is, number one, if she could simplify the explanation of the 2-1 buy down, and then just talk about the realities of it, actually it being used from somebody who has done 2-1 buy downs.
Great. Well, compared to an adjustable rate mortgage, unless you're in the business, is very complicated to understand. A buy down, however, is very easy to understand. A buy down requires a pool of money, which normally a lot of realtors are negotiating with the seller to pay.
Right.
And that pot of money supplements the rate. Let's say that you have a 6% mortgage rate, but that's kind of uncomfortable for a first-time home buyer right out the gate. Well, you do the buy down to buy that rate down to 4%. So from 6 to 4, that's a 2-1 buy down. That pot of money supplements that 4% payment to make it equal the 6% payment. So that, and then the next year, there's a smaller pot of money, but there's also a smaller difference between the 5% and the 6% payment. So by the time you get to 6%, that pot of money is used up and you're at your final rate. And the beauty of that is, on an adjustable, your end rate, depending on what the economy does, could be 5 or 6% above the start rate. For a buy down, a 2-1 buy down, it will never be more than 2% above that 4%.
And I want to also say, not only for first-time home buyers would that benefit, but for investors or second home owners that really are looking to rent the property to help pay for the investment property. You know, most people who are really in the rental business will tell you that you're going to really have your best rental year in that third year. So if you had a reduced rate that first year and that second year while you're getting that rental property really up and going, by that third year you should have increased rentals that would be able to help pay that difference of when the buy down goes up to the rate that it was originally, which would be 6, 7 or higher percent depending on where rates are at that particular time. So it can help for investors as well.
Correct.
Thank you for explaining that, because sure, most of you guys have heard talk about this buy down, and so it's really good to know that you have that option, and so a lot of lenders are utilizing that. Well, Sherry also, we're going to wrap our interview up with Sherry. She also does VA and FHA loans, so FHA loans can be another good product, especially for first-time home buyers. And then for all you veterans out there, Sherry has done many VA loans over her 37 years, so she's a great one to talk to on the VA. Thank you so much, Sherry, for sharing your infinite wisdom with us today. And as you saw in some previous videos that we've done, how important it is to get pre-qualified before you actually start going to look at property. You can always engage a realtor before being pre-qualified, but super important that you do actually get pre-qualified before you start looking.
And remember, if this is your first time to the channel, go ahead and like, subscribe, and ring the little bell so you can be notified each and every time we put out new content. And we hope to see you around town.